What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Labs. Man, you know what time it is. It's Thursday, leading up into our non-farm payrolls live trading session. You know it's going down. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Ty Trade Futures, and of course, I'm here with my guy.
You already know who it is, man. It's your boy, I'm the D guy, aka Pro Financial. Man, I hope you guys are ready for tomorrow. It's going to be a big one. We should be definitely seeing some moves tomorrow. So tonight is definitely going to be very important. So make sure you have your notebooks and your pens so we can lock in to get ready for tomorrow. Let's just dive on in.
Most definitely. So with that being said, let's go ahead and get this thing rolling. All right, so as you guys know, we want to start off the day by trading one of our favorite pairs we've been going over for a long time. You guys know this one very well, the US 30, aka the Dow Jones. So let's pick back up on our analysis from last week, and let's see exactly what's been going on since Tuesday. Of course, we start at the higher time frames doing our top-down analysis. The higher time frames tell us what's going on for the bigger picture. So we can tell just by looking at this chart. We definitely have been in a very strong uptrend. We talked about these last two tweezer bottoms. Last week's candle was green. We finished up on the positive side. And this week so far, we're forming a doji. So a doji represents indecision, so it's not too much to go on based off this week's candle. And it still hasn't closed. We have a lot of news coming out tomorrow, so it'll definitely close, probably a lot different than what it looks like right now. But what I want to focus on day right here. Start from this lower low down here. This is the lowest point that we made since May 13th. Now follow this up and notice what we've been having. We've been having
Yo,
higher lows.
you still there?
Oh man, I'm still here.
You going in and out?
Where did I cut out?
You cut out at what we need to focus on. You said what we really need to focus on is you was like,
Okay. So what we really need to focus on are these higher lows that have been established since May 13th. We have the first initial higher low that came from this downtrend where we thought things might get ugly, but they didn't. They turned around. We had a higher low on May 19th. We had another higher low on May 27th, and we had another higher low most recently on June 3rd. I think that's today, if I'm not mistaken. So we've been making these higher lows, and we know that when it comes to the Dow Jones and when it comes to uptrends, you start seeing higher highs and higher lows start to form consecutively. That probably means that a big up move is coming. I mean, that's pretty obvious from what we've been studying on the Dow Jones. We know that the uptrend is up, right? It just makes sense. It's in the name itself. So now that we know which way the market is trending, it's trending up on a long-term perspective. We break it down to the lower time frames like the hourly chart and the 4 hour to figure out exactly where we want to hop in. So let's pull up our levels right now. Let's pull up our support and resistance. And what you guys can notice is that remember how we were talking about this double top period for the last 2 weeks? We said if prices break above it, the uptrend is valid. And what we've been seeing so far this week is just a retest of that level continuously. And I think this is a great example of how in the market, sometimes it won't be just a clean break and a clean retest. It might come and retest that level multiple times, and that's what we've been seeing so far this week. We had the first initial test, May 31st. We came back, tested the top of the zone June 1st. We ran through the zone, had a false breakout, came back above it today. So that level has been being tested all week long, but it has failed to break on every occasion. So tomorrow for the non-farm payrolls, we could either expect prices to just skyrocket higher, or maybe the news event can actually be the catalyst that finally gives the market enough strength to actually push it down like it's been trying to go. But this is the Dow Jones, so we want to keep in mind what the overall trend is. But because news is coming out tomorrow, we want to weigh out every possible option based on what we see. So let's actually look at that right now. We start from this last high that we made at 34,800. Since that time, we have been making lower lows, lower highs, right? But we don't want to read too much into that because we understand where we are on the long term picture of things. Because you could make lower lows and lower highs, still be above a major level of support on the chart. If you don't know any better, you see lower lows and lower highs, you think it's short. All the buyers are just waiting for where you go short, they go long, and they capitalize. So I want to make sure that we don't get caught up in a move like that trading the Dow Jones. I would say right now I have no direction per se because we have news coming out tomorrow, and we have a long tail candle wick up here at the top. Now this candle is kind of concerning to me because it indicates that it's more downside to come. And if we look at the price action that's followed, we have a lower high followed by another lower high. Even though we had all of this bullish momentum, we're still making lower highs in comparison to where we came from. Now, I'm not saying the market is going to crash, but it could definitely still pull back a little bit just based off of this wick. That's very, very, very scary if you look, because if you take a look at any time else you've seen that type of wick form at the top of a move, we see it right here. We see what that led to. Another long tail wick right here. We see what that led to. One more long tail candle wick. It's already led to selling so far. So it's no telling where that could possibly go. So I think overall, I have to lean towards the long, but I'm respecting the shorts because they seem like they could be in a position where they might push prices back down. So before I go, let's figure out where they could push prices down to. I would probably just say 34,250. That's the most recent level of support that I see. If we follow that all the way across, we can see that not only has it been support in the most recent times, but it's also been resistance over in the past. That's a level of duality. We know that that's important. So we pretty much just want to focus on that level right there. And also, let's not discount the fact that that's a major quarter level. 250 is the quarter level for the thousands places. So that's a super important level. We could definitely see that level get touched tomorrow. So keep that in mind. 34,250. If we get a bounce from that level with higher lows, let's start looking for longs potentially. So that's my ideas for the Dow Jones. It's a lot of good information coming out tomorrow. So let's see how it goes. And let's get Darren's analysis on US 30 and see how he wants to play it.
All right. So let's go right to the weekly really quick. Well, let's not go to let's go right to the monthly because, like we said, we always want to just make sure. I know he just went through it, but I just want to just give it in a habit. The only thing we're looking for is to make sure that the 20 is above the 50. We're looking for higher highs and higher lows, and that's all we're looking for. So that's been confirmed. We're gonna drop down to the weekly. But there's something that was on the 4 hour and the daily I wanted to kind of point out, but I'll kind of wait till I get there to kind of point it out. Kind of same thing. Nothing has really changed. 20s above the 50, higher highs, higher lows. Everything still seems to be lining up. So go ahead and drop down to the daily. But what I kind of notice before I get there is that you'll see how, to me, at least what I point out, that like the market could be on one side of the price, and then it becomes on the next side of price. That kind of lets you know in what side or what direction you should be in based on what we've seen in the market. So when we get down there, I'll explain that. So still 20 above the 50, higher high over here. It's been higher highs and higher lows, but we came into some resistance. We made that high at the top, came down for the double top for that support, and it looks like now we even are now sitting in an area where prices are sitting at high areas and could either be setting up to continue up to go longer or be trying to come back down to retest some lower areas before it decides to go back up. But for the most part, right now, we're only looking for buys. Only looking for buys, and so we have to look to try to get in at lower prices. So go ahead and go to the 4 hour. So let me try to explain what I was saying. How pick that for me. So if we kind of like say if we put like a line, unhide your signals. So see how that green line is, and let's start all the way over here by the 26. Notice how like on this side of in this time period in time, the market was kind of below the green line, and we just been kind of low, and that's really been on the selling side of things. When you're down below, then we notice how we came up and we broke the green line. So now we're above the green line. It's been some time above the green line, not too much time, but then it actually came back down. And pretty much the thing I'm trying to point out is that I noticed that when the market is down below the green line, that you should be kind of looking for the market to be either coming down to strong demand zones, coming into lower prices, setting up for the short. But if prices are above that green line, no, wait, so if it's down below the green line, looking for shorts. If it's above the green line, we'll be looking for buys. So in this case, being that we're above the green line, I feel like we will be looking for buys, and it's only, and I say that because if you see how over here on the 24th we were down below the green line. It was once the ceiling, and now that the market like today has just broken above that green line, so I feel like it was once above it and is now standing on it. I feel like, to me, it would only make sense that we should go for a buy because we're down below the green line. I don't know if that made any sense, but I just feel like when it was down below the green line, it was more selling opportunities than anything. But once we get above that green line, we should be looking for buying opportunities. So we're looking for buy opportunities. So I feel like where we are right now is a very crucial area because where we are right now lines up with the high over to the left on the 24th. That would be prime area for buyers for us to hop in to go to bring prices higher. But we want to try to get in as low as possible. So let's go down to the 5 minute. To me, when we bring it down to lower time frames, it always shows the best. So when we were once below the green line over here at 600, 600 and 900, or 6 o'clock and 9 o'clock. We were down below the zone at 34,580. We finally, it had momentum to break up above that zone, even come back down to retest it. So all the way, I'm talking about the zone up at 3458. Yep, that zone. So we were down once below there, playing down there. It made the flag. So being that it broke up and it came down to retest that zone, and then it came back all the way down, I feel like a good area would be this zone down at the 34,500. I would want to see prices try to come back down there to try to retest that lower area. Maybe bring it up a little bit where that high is. Yep, right. Yep, probably like 34, 5, 15 or 20. I wanted to do it like right before where it lines up with the 20 moving average.
So you want a zone right here.
Yep, that's the top of it, and the bottom of the zone would be the wick is right here. I just wanted to see if it stays above that zone. But you could take that one away. But I just wanted to see what it looked like. Yep, right there. And I say that because where we are right now, if you follow that zone all the way over, it has hit into that zone two previous other times. And the last time it broke this particular area, we went all the way back down to the green line. So I would want to see prices. If it could break this zone right here, I would be kind of convinced like, oh snap, we probably could be going down. Obviously, the zone at 34475 would be the big confirmation that we're going short. But all in all, I'm looking for buys only. I want to see what prices come down to at 34,525 at that 20 moving average. If we can find support down there, I would want to take prices up higher. The only reason why I feel like this zone right here, you could actually, after this, I explain this, you could take it away. I just feel like being that tomorrow is going to be non-farm payroll, I feel like this zone would be quote unquote weak compared to the zone right below it. just because I feel like the area down below, the market has spent a little bit more time in it compared to the zone up top. So go to the 15 minute, right, 15-minute right quick too. How many pips is it from the zone that you drew to the top one? Okay. The only thing that kind of worries me just a little bit with this one is that, yeah, the overall trend is up. We should be looking for buys. It's the down movement that just happened, and the way it wicked off of that bottom down there has shown me whatever's sitting right there, the market doesn't want nothing to do with it. And it literally hit that area, came back up and closed up much higher. So where all that wick area is seems to be like whatever was sitting there, uh, the market want nothing to do with it. So I feel like I don't think it's gonna be able to break that. I just feel like since that we made this big old long flag pole, I feel like it's we might as well just wait for it to continue to go up. I don't even think I wouldn't expect it to break the zone down below the one that the mouse is sitting in. So to conclude, the price, I want me to write this price down so if I can get it ready for tomorrow. So this is U30. So give me the price right where the zone you just drew. 34,540.
Yep.
Uh and what is the price? Bring it shrink it shorter again for me. What is the price at? So you see where the red wick is. What price is it at the body? Yeah, 34,520. Go to the hour. If you got in, where would you take it up to? Would you just try to take it back up to structure?
Yeah, I'll take it right here.
All right, yeah,
650.
346. Yeah, 34650. All right, so to conclude, I'm just waiting for price to come down as low as 34520. Find resistance, and I want to take it back up to 34650.
34650.
How many pips is that? That's what. That's 34. That's like 20, 50, 60. Less than 20. Is it less than 20?
You said what? Six? You said
So
six?
to 34520 to 34650.
That's 130.
130. So I could definitely get a good 40 pips out of that.
Wait, did I give you the right numbers? You say the price one more time.
I want to try to get in at 34520
Oh yeah, that's right. 130.
to. Okay.
Yeah, that's a nice one.
Because that
So
three.
yeah.
Huh?
Now go ahead.
I
Go
was gonna
ahead.
say
What was
that
you going?
34650 is just top for structure, right?
Yep. So there you have it, you guys. 34,650. That's our target that we're aiming for. US 30. So that'll actually bring us into our next pair that we want to talk about tonight, which is the good old dollar Swiss. Let's go ahead and move into these currency markets and see exactly what's been going on. We had some good things happen over the past 2 days on the levels that we were telling you guys about before, so we'll discuss that. And then we'll go ahead and break this chart down and figure out exactly where it could possibly be going. Now, here's what I've been kind of noticing with dollar Swiss. So before I get into that, of course, let's start from our top-down analysis perspective. Let's start from the weekly chart. You guys already know what I'm about to say. Since 2019, this pair has been in a downtrend from a top of $1 all the way to a bottom of 88 cents. And it's been in a downtrend for 2 years, making lower lows and lower highs. So that kind of sets up the picture for the environment that we're looking at today on the daily chart. So let's actually get down into the nitty-gritty of this daily chart and tell you why I think that the trend could possibly be turning around if it can break past where we're at right now. Now, where we're at right now is actually a major level of resistance in the market that's been holding up. It's actually been the highest point on this chart in the most recent leg of the downtrend. Prices have failed every time that they tried to close above 90.40. So 90.40 is a very important price. Prices, for whatever reason, are finding a lot of supply up there. Sellers are stepping in and defending that level every time buyers get into it. Even as recently as we saw today with this extremely bullish candle that we saw, with all that bullish momentum, it still could not close beyond that point. So I think that's a very interesting sign. Now, keep in mind the overall trend is down. In a downtrend, you look for areas that used to be or that still are major levels of supply, and you look for those levels to show rejection. When you see that and you see the market start to roll over with any type of bearish price action, that's when you start looking for your short trades. So I would say that right now where we're at, we got to keep our eyes open and start looking for that bearish price action. Because if we see anything bearish around this supply zone, we already know what the overall trend is. That would be the perfect setup for our short trades. But on the other hand, we also have to acknowledge the fact that ever since we made this low down here at 89.28, if you actually follow the chart, we've made a higher low. Coming off of that higher low, we had the huge daily candle push to the upside that we had today. So that could be the potential momentum that the market needs to go ahead and start a new retracement. And also, if we look at where this move ended, this move ended at what used to be structural support over here to the left. What used to be these highs over here, actually, as a matter of fact, we can scroll all the way over. I know you guys remember these tops right here from this inverse head and shoulders. We talked about these tops all year long. And it's no surprise that nowadays they're coming back to retest those levels again. These tops over here from January were the same levels that we reversed from on our most recent leg to the downside. So just to put that in perspective, we touched off a major support level, higher low, bullish momentum coming out of the higher low. So that's just setting the picture up on the daily chart. But you got to break it down to the 4-hour. And on the 4-hour, I honestly, I love dollar Swiss, and I know what a short move looks like. This one right here doesn't really look like it. This looks more so like what we actually saw in January. So let me go back to the daily chart because I'm connecting things in my head as I'm looking at it, because what I saw down here was kind of similar to what I'm seeing right now. Not all the way the same, but it was very similar because we came into a level over here. We kind of consolidated. We found a bottom, higher low, coming up to test the consolidation. Look at what happened over here. We found a bottom. We consolidated. We made the lowest point. We made a higher low. We came back up to the consolidation area. We had bullish momentum, and then we finally broke through those levels. So nothing in the market is ever guaranteed to happen like it has before, but we can definitely keep that in mind because that's definitely something that's on the table. So let me just get back to the hourly chart so we can see exactly how we want to play it. So yeah, man, I know the overall trend is down, but right now I have to lean more towards the long side until I see the buyers come back and retest that supply zone again. So Even though I'm leaning towards the buy side, I'm not taking the long. I'm permanently stuck on the short side for this pair until we break above 91, which is kind of these levels up here. In my opinion, we break above these, the uptrend is definitely solidified. I think right now it's 70% solidified. Sellers still have a 30% chance to push it down. News is coming out tomorrow, so that's definitely going to affect this pair because it is a US dollar pair in addition to the Swiss part that goes on the back end of it. So right now, man, I'm seeing bullish activity in the market. A spade is a spade. I have to call it how it is. For all of my short sellers, you either need to wait until prices break back down below what used to be support right here at 90.29. So you need that to break before you even think about going short. So until we see that break of 90.29, lower lows and lower highs off of that break, I can't advise on the short. In terms of the long, I can't advise on that either. Well, really, at least from my perspective, in the situation where I say news is coming tomorrow, the news is going to tell you which way this pair wants to move. So until that news comes out, it's kind of hard for me to give a fair and accurate description right now. So we have our information for both sides. We'll wait until the move tomorrow. And that's all I have to say for Dollar Swiss. So let's go ahead, pass it over to Darren. Let's get his thoughts on this one.
All right, so let's just go to the top-down analysis because I actually want to point something out, but like I never want to jump right on into it. I want you guys to get into the habit of doing the top-down analysis. Just flash to the monthly real quick. All right, just wanted to make sure the 20 was below the 50. All right, go ahead and jump down to the weekly because it's pretty much going to be like the same thing. All right, so like I said, the monthly and the weekly and the daily is only to solidify your direction in which you want to go. You're pretty much trying to find patterns and find habits of the market and find prices in which the area has come to before and try to use those prices to try to wait for the market to come back to that price to capitalize on a trade, a nice accurate trade. So the 20 is below the 50, still letting us know that the bears are in control. The only thing that kind of shocks me is that even though we've been in this long lower down movement for a very long time, we broke structure over here at 2021. It came all the way up, broke that little high over to the left. But I guess that's a real example of a false breakout. It came up, found resistance, and then it just shot all the way back down with no type of stop or nothing, no stop lights at all, just straight green light. So the market broke over both the 20 and the 50, which is good signs, letting us know the 20. I'm sorry, the market is in a selling market right now. So what I like to always like to point out is try to look at these left areas where these wicks are. Those wicks are going to be very important because the nope, over a little bit more, up a little more. Yep, those areas are going to be, to me, is going to be very important because those wicks actually line up with that wick all the way to the left, which is over by 2020, and that, like, look how it came down and then it came back up to close. So I feel like that area right there alone kind of lets me know that would be a good retest area where the market wants to come back to do its continuing direction, whether it's down, coming up into that area and continuing down. So let's drop down to the daily. Okay, so we just been going straight down, not too much pullbacks. I mean, we got like a couple pullbacks on this big drop down. Notice how that a couple of times these pullbacks lined up with highs formed all the way over at the end of 2020. So that's no over here by 2020 over here. Nope, 2020. Yep, right there. All these highs. Yep, go come down a little bit. Yep, those highs all the way over there. So to me, on high just signals. See the way you have this purple zone, that would be like a good area to me. So actually, I would bring that purple zone down a little bit so it's covering the wicks. And pretty and pretty much I would use each like one of these little top areas as pullback areas. So let's kind of look at where we are right now. So I feel like where we are right now, being that we broke its previous low area, the next low area would be somewhere around like the 91. Yep, that area right there. So to me, that'd be an area I would want to wait to see what the market does when it comes to it. And I feel like even though it hasn't broken, bringing the mouse down just a little bit, bring it down, down, pull it down, right up, come back up. You went too fast. Right there. Wait, come back down a little bit. Right there. Even though we haven't broken this area yet, which is another strong area of resistance the market has come to, we haven't broken it yet. So it probably one or two things. It probably won't have enough momentum to even break that area, depending on what's going to happen tomorrow. So if this level gets broken, obviously it's the next level up. But being that we kind of haven't really broken this area, we came into this area and it looks like the next candle that formed was like a lower candle. So that kind of looks like a lower high we kind of just formed. So where we are right now, the candle before that candle. Yep. So that candle, the candle where we're in, pretty much formed a lower. I mean, the candle was at a lower. It formed at a lower. How do I say? It didn't form higher than the wick. It actually formed down lower. Does that make sense?
A little bit.
Yeah. So, huh?
Talking about this candle.
Yeah. Yep. I'm pretty much talking about that. Being that we didn't, I feel like being that it kind of formed a little bit lower than the wick, even though it's forming a bullish wick, which is like it didn't matter that it formed lower on the side because now it's a bullish wick. But I feel like also the wicks that where those are is pretty much enough, is pretty much the room that I'm expecting it to go before it turns around. Yep. That that wick area. So if it breaks that wick area, then we would have to begin to thinking about shorts, but I don't feel like it's gonna be break the wick area where we are right now. So all in all, I'm looking for shorts. So let's drop down to a lower time frame. Let me write down a good price. So the last price that you said was that you were looking at was the 90 cents.
I would say for shorts, you need it below 90, 90.25. For the longs, and I would say be patient.
Be
It's
patient,
hard to say.
because I'm not looking for the longs. I'm looking for an area for it to pull back into to continue down. Even though it came down to that 90 cents, um, I feel like I don't know. I'm just gonna have to be patient on this one. So go to the 1 hour chart. Everything is lining up for the down movement. Actually, go to the 4 hour one right quick.
Damn, the hourly look good. I ain't gonna lie.
Yeah.
Mm, trade what
I
I
just feel
see.
like even though everything lines up for the short on the higher time frames, I feel like I definitely want to be a little bit more patient on this one and make sure I get the right confirmation, because I feel like you can kind of still argue both, even though the overall direction is down.
That's a fact.
But like you
Cause
said, wait. If you're going long, you have to wait right now. Long was right now. If you're going to take a long, it's going to only be going to the retracement level in which the sellers are waiting for. So you said your overall direction was going short.
yeah, originally, but now that I'm kind of looking at it, what I'm realizing is that we're in a situation where you got long term technical factors starting to come up that's kind of clashing with the short term.
Mm-hmm.
Because At the same time, this 90 cents line, let's not overlook that. I don't think we touched
Yep.
on that recently, but dollar Swiss from 2015 until now has been in a long-term range between a dollar and 90 cents. Now, anytime it goes below 90 cents, it'll stay there for a little bit, but it's not going to be long before it gets back above that 90 and starts pushing up. We saw that same thing happen at the beginning of the year when they came all the way down to 88. We thought, oh yeah, that's the break. And then eventually they was like, nah, we're getting back above 90.
Mm-hmm.
So they had a similar situation here where they tried to break past that 90 level. They came all the way down to the 89s, almost 89.25. And then they turned it right back around, made a higher low, had bullish momentum coming off of that bottom, broke past all the moving averages and said, look, right now we're going up. So it's very similar to what we saw in January back over here.
Mm-hmm.
I
Yeah.
don't know.
So I'm gonna trade what I see, and what I'm seeing on all higher time frames is bearish activity, lower lows and lower highs. So if it doesn't break those red candles over to the left by the 17th, those higher ones, high. Yep, if it doesn't break below that, I'm just looking for the market to play in that area and then just drop. So to conclude, I'm gonna let me find, oh yeah, these two areas. Let me write some areas. So this is dollar Swiss. We're looking for sales. So what is the top of those wicks over here at the 17th? What price is that?
90,
Nine, huh?
90.50.
90.50. Um, and what is the price? So of the next set of lower areas of lower prices. Yep, meaning lower lows. Does that? I don't know if that says it. You know how we look for previous low areas. What's the next previous low area that if it breaks?
Let's say 90.25.
Okay. What about highs? Previous high areas. So that one. Go to the next one up. 90, 92. 90, 90. I don't think it's gonna come all the way up there. But hey, it's worth a shot. That beat right there would definitely be a good level to hop in for a short and bring it back down to the green line.
I'm gonna
Uh, huh?
I'm gonna go out on a hunch right here, and I'm gonna say tomorrow non-farm payroll is gonna push it all the way back up here.
Yep, yep. And that's the area. That's why I say, yo, I think, yo, 90, 90. I think I'm liking 90, 90 to hop in for a short. So I'm gonna do 90, 90 and 90, 50, and I'm looking to bring it back down to 90 cents. But go to the daily right quick or the weekly. I want to see like the overall, like bringing the whole market into it. Do you think that since we came down to this green line, that now we could be trying to go back up to touch the dollar again?
Most definitely, because we're kind of starting the second leg of a double bottom. If this was the first bottom, this could be the second one, or technically this is a higher low in comparison to where we started from at the beginning of the year.
Yeah. And I feel
Still,
like now that we look at a bigger picture, it came the last time it dipped below 90 cents. It stayed down there a little bit. It came down there a couple of times, but didn't spend a lot of time below there. Then something crazy happened. Was that non-farm payroll, bro?
right here.
Yeah.
No, that was some central banking stuff
What day
over in
did that fall
Switzerland.
on? The
Say
first.
what?
What day did that fall on? The first Friday of the month.
January 12th, 2015.
2015. And we said that's in what month?
January
January. January what?
12th.
Nah, January 12th was a Monday. What in the hell happened there? But pretty much it came down below that green line again, touched all the way at 83. Like, what? That came out of nowhere. But now squeeze it over a little bit now. I'm trying to see is ever since it came down all the way low down, it made a low, a higher low. So we're now at the bottom green line. We touched the next green line, and now we're testing on the next, dancing on the next green line. You see what I'm saying? So over at the 2012, when we was all the way at the bottom, we shot up, played around, played around, played around, tested on the green line, on the first green line. That didn't test it. That blew through it. And the next time it retested it was over here at I don't know. I just feel like we're definitely heading to the dollar. So to conclude, I'm looking for prices to probably come back down to retest 90 cents to eventually go all the way back up to the dollar. So I'm only looking for shorts right now, and that's my area. So I'm looking for 90, 50, and 90, 90, and that's pretty much my wrap up. I didn't even peep that. Hide the I wish you can hide like just the hide the moving averages. It's like for some reason, like I feel like I don't know, for some reason I want to go long on this joint for some reason.
Me too.
And I feel like the only reason why I want to go long is because based on what it did over here before. The last time it came down, played around, and broke the 8.90 cents level, it went all the way up to $1.
And I feel like we had like what's it called? It's called a preview when they show you what the show is gonna look like. They show you the highlights.
Yeah.
I think this first move from the beginning of the year where it first broke through 90, and then we had that huge up move all the way to 94. That's when they was trying to go for that dollar, but they was like, "Hold on, man, it's too early for that. We see what y'all like, but it's too early."
Mm-hmm.
I think now might be the time.
Right. Because I feel like if it does try to do some craziness and come back and touch 83, I feel like it's just gonna shoot to $1 and just fall over.
I would say for all my long term bulls, if you like swing positions and you like maybe you like taking investments over trades, this could be a potential trade that you could look at where you consider going long and holding it back up to $1 or back up to the midpoint where it touched that before at structure at 95. Either way, you can get anywhere from 500 to 1,000 pips. I can't tell you how much time it's going to take because we can see that this is the weekly chart. So look at how long it takes to go from top to bottom. It takes time. But if you're willing to hold it, this could be a potential good loan for you guys.
But you have to make sure you don't over leverage yourself, because even if you do decide to sit, you want to make sure you're not trying to put so much up, trying to make $1 million and not trying to like make it a marathon. You put like a small amount, so if it does go against you, you have enough capital in your account for it. You know what I mean? So you can plan for that risk. So it's all about the risk management.
For sure. Don't put all your eggs in one basket.
For sure, for sure. So I know that that's the wrap up. I was going to hop right into my peers.
All right, let's get it.
And I want to know tomorrow, I want to make sure that we try to create some type of plan for tomorrow and try to go in tomorrow with like a strong trader's psychology. We want to kind of prepare for that. Is it sharing?
Nope. Yep.
All right, let's pull up my chart really quick. All right. So let's take this away. We're gonna jump right into gold, and I feel like gold, huh?
What happened?
Yo, this joint never. Whatever happened, bro, that joint was definitely just fell over. I don't know what happened. But let's look at this on a monthly. So, like we said, this green zone that we were kind of sitting in was an area of the market's previous all-time high price. It was an area that the market came to and didn't spend a lot of time in and got up out of there. Fast forward like from 2011 to 2021, like 20 years later, we're sitting into that same area. So now we want to try to kind of look, what did the market do the last time it came into this area? We came up, we made this little strong wick, came down, pushed down. We pushed up again. We're starting to have some wick rejections here. The market couldn't find enough momentum to come in to try to break it. Came down here, tried to touch for another try. Came back up, couldn't do it. The market shot all the way back down. Then they tried one more time. But notice how that these wicks that's over here, they're getting lower and lower. They're not trying. The no body areas are pretty much forming in the areas of this wick. We're showing that whatever's sitting at this area, the market doesn't want nothing to do with it. So to me, we've been looking like we've been getting lower lows and a lower high. So we got our first leg of our lower low, lower high, lower low. We now could be forming up for a lower high. So I feel like I want to kind of follow what the market did over here, and I want to begin to look for sells. Even though the market is kind of is in an overall uptrend, I want to take and kind of scout the market. So let's not get too much into that. So the only thing we see right now, the 7 is above the 65. We've been getting lower lows and lower highs. Let's drop down to the weekly. So as you can see, it's a little bit more clear where these wicks are. You can notice how ever since we made this high, we came down lower, these wicks formed. Came down, pushed a little bit lower, the wicks just started getting lower and lower. Then we couldn't break this structure. So first we couldn't break this structure, these wicks. Then we couldn't, for some reason, couldn't break this. Yeah, the bodies came into it, but it shot down again. Then it tried one more time to try to break this area of these wicks and couldn't do it. That was the mark that broke the camel's back, and it made it go all the way back down to a previous high in which the market was at one point in time. Before all of this formed, this was an overall high. So it came down here. We tried to come back up to this wick area. There was no chance. So we put a down trend line to kind of form a wedge. It's looking like we got out of that wedge or broke that wedge. And then I think, like I said, let's go down to the the daily. So pretty much the 7 is above the 65. Hold on. The 7 is above the 65 on the weekly. The 7 is above the 65 on the, I keep saying monthly. I mean weekly. So 7 above on the monthly, 7 above on the weekly, and then 7 above on the daily. But there was two things that I said. I said even though we got to break out of this wedge area and made this high, I said there was two things that we either needed to do. Either we had to break this wick area or retest this wick area, or we was going to come down and try to retest this area or to touch the downtrend line to the very least. What did the market do? It broke this high to the left immediately, which I knew it was going to break. But then it even broke this one. It shot all the way down, formed a wick, and then the next candle came down and formed. It looked like to me we just got a good enough touch or tap to hit. And honestly, this is good enough because this actually lines up with a previous high and which we were at once before. So if I actually bring this down just a little bit, if this market or this candle comes up and close somewhere near this high over here, that will be a good confirmation. Let me know this was the break of the wedge, and now we should be looking for the market to begin to make higher highs and higher lows and break these highs, which it tried to do before, and we're getting success. So I feel like this was the roundup or the running head start the market's going to need to finally bust through these highs it was having trouble doing before. So if we get the break of this high, this will be break this high first. Then we'll be able to try to either come back in to either retouch these highs again or not. But this is the ultimate goal, to come all the way back up here. I think this is probably being a little too greedy. I will be happy enough for getting it from down here all the way up. So just to recap, I feel like if we can get the market to come back down to retest this down trend line or this previous high area in which we were at before, and if I was to follow it to the left, some of these wick areas, if I can get to stay above this zone area here, I will begin to look for long plays. And I would try to get it as low as possible, try to get it exactly off of the blue line, or I would use some of these wicks over to the left to break, to hop in for my entries. So for the most part, I want to begin to look for up plays just because we got a break of this wedge. We finally got that retest we've been waiting, that we didn't think we were going to get. But I think this red candle was needed because there was a lot of wick action in this area. And I feel like not a regular candle was going to be powerful enough to break it. So I feel like we needed a stronger or a bigger momentum candle to come down and retest areas we wanted it to retest. First it was this one, then it was this one. I think this one was perfect, and I feel like it's going to come down a little bit more, but definitely come back up to close up here. If it does pull all the way down to hit this, I would definitely guarantee the next candle is going to be green. So Ty, tell me what you're thinking.
All right, so let's hide everything. So for me, right now, on Tuesday, I thought that gold was in a very nice uptrend, and everything that I saw on the chart up until that point kind of pointed to that and supported that statement. But now that I've seen this most recent bearish engulfing that just formed on the big down candle that we can see, I think that's for today's day, that actually formed today. So we had a bearish engulfing that ran past every single candle that was formed over the past 3 weeks, if we want to call it that. So to me, that's very important because we know, for one thing, a bearish engulfing is one of the most bearish patterns that you could find on a chart, especially when it's followed by another red candle directly after it. And that's exactly what we're seeing right now. Now, mind you, today's daily candle hasn't been closed all the way yet. We're actually only a couple hours into the day, so we still have the whole day ahead of us, including the non-farm payrolls announcement. So things could definitely change, but based on what I'm seeing in the long term picture, like maybe over the next month or so, I think that maybe gold could decrease and come all the way back down to the high that it made at 1,840 at these last previous highs that we're seeing right here, right above May. So I think that could be a potential move that we see, and that's what I would be looking for. But before that move happens, usually when you see big down move, impulsive down moves like we saw today, you usually have very aggressive retracement back to the upside. Usually comes back to what used to be a last low. So we can find that somewhere around 1885 ish. And then you see the market has a tendency to kind of roll over and just fall off from that point. So if we start to see that setup start to form, we could potentially look for this second leg to the downside for what we just saw off of the bearish engulfing. But if not, we'll have to stick towards our overall bias of being long. But now that the market has thrown a wrench into the picture and hit us with this bearish engulfing, I have to lean more towards that side until things get better and get back above 1885 and stay above 1,885. Until then, my bias is on the short side.
All right, so there you have it. Two different analysis. Him thinking that since we had such a bearish engulfing candle, that he would have to believe that we're going to either shoot back up to the top, you said, or we're going to continue down, right? Is that what you said?
Yep.
So I feel like let's see how tomorrow plays out, because I beg to differ. I feel like being that we got a broke of this so-called downtrend it was kind of respecting for a little bit, I feel like this could possibly be that move to head back up into this area, and this will probably be the area we can begin to look for short areas. But I feel like being that the higher time frames are all pointing to long moves, we would have to kind of stay on what we see, and that is bullish activity. So Ty is absolutely right. After all this bearish momentum, this is a daily candle. This haven't even closed yet. So actually, this could be forming red right now, and we could wake up tomorrow and it can be shoot all the way up here and be green. So that's why we always say the complete close of that candle. Let's go to the hour. If we look at it here, this is absolutely crazy. We're in areas that the market was at previously before. And I feel like that we could definitely be heading up, because if it comes down any bit lower, it's just going to break structure. So let's see how non-farm payroll plays out tomorrow. But like I said, I'm looking for up plays. We're in very strong demand zones right now, and I feel like this would be the perfect area to hop in for a buy. But we want to be patient, and we want to make sure that we get in on a very high probable area. We don't want to try to get in an area where we're rushing the play, so to say. So I feel like being that we definitely just got the broke of this lower red zone, I feel like that we can definitely possibly get a strong momentum back up, push back up like Tiberius said, and find higher prices to go lower. But to conclude, I think overall, being that dollar has a lot of activity going out tomorrow, and especially if it's good, tomorrow's play could actually be strong enough to actually agree with Tiberius isn't saying, and says we're either gonna shoot back up to get to higher prices before we sell, or being that this was so strong, we're not gonna have no too much of a pullback, and we're just gonna shoot down lower. So tomorrow, so let's put up some areas. So this is gold. The first area I definitely want to look to hop into. So since the overall trend is up, I want to get in at lower prices, buy low, sell high. I feel like where we are right now is a very good price. So If we can do 169, 160, 1866 flat. 1864.50. And Tiberius, what's two areas that you wanted to hop in for the? You said you was going short, right?
Yeah, I want to look
So
for the short. If we get a bounce back up to 1885
so you said
or
you want to
or
buy
1880.
1885 or 1880, and you're pretty much taking it back higher to take profit where? Back down the structure where we are now.
Now I would probably say at 1830.
1830. Okay, back down here.
Yep.
What about 1840?
Now I would take 30.
1830 to take
40
profit.
is leaving some on the table.
All right, 1840. All right, so that's there you have it, guys. So I'm gonna be looking for prices to buy and go long to set up for the sell, which is everyone's anticipating. But I think, in my honest opinion, I think once it starts to go up, it's gonna break these highs. It's gonna continue up, and I feel like it's gonna do that just because of what the higher time frame is showing, and I feel like,
What do you?
huh?
What's your thoughts on that weekly candle that we on right now? Is that a bearish engulfing on the
The,
weekly too?
this red one.
Yep.
But I feel like in order to continue to go up to either touch any one of these highs again, they would have to try to come back down and agree with the previous structures that it broke. So if this was one of the structures that it broke right here, which lines up with the 7 moving average, if it comes back down here, this was exactly what needed to happen in order to go long. But you would be absolutely right. That short move would need to happen in order for my buy move to happen. So pretty much, you're always the move before for me. Like I need your move to happen, but for me to happen. But you don't need me. Like I need your move to happen, which is short all the way down before it goes long. You don't need, and there's no move before you, if that makes any sense. But to conclude, um, I would really want price to come back up here to retest these areas, but I just feel like with this wedge area, it always follows the wedge pattern. Like I've always seen the wedge pattern hold up, especially when you draw it on higher time frames. And when it breaks out of it and retests it perfectly like it is, kind of like it is right now, it kind of goes back up a little bit more. Now, I'm not saying that it's not going to come back out of it a little bit up here and not break all the way back down to where Tiberius said at 1830. But I feel like for my move to ultimately happen, I would need Tiberius's bearish engulfing candles to form to bring prices down lower. But I just feel like where we are right now, um, coming up back all the way up here is pretty much a nice little up move. Yeah, that's a lot. All right, so the prices, just to recap, the prices for gold I'm looking for is 1866 flat, 1864.50. Tiberius for his buys is looking for 1885 and 1880, taking it to 1840. So that's the wrap up for gold. We're gonna jump right over to AU. All right, AU. I think it's kind of not really the same setup as gold. I feel like gold and AU. I'm not gonna say they necessarily have a correlation, but I feel like gold is the opposite of dollar or not dollar, but that is pretty much what it's correlated to. And when the stronger the dollar is, the weaker the dollar gets. I mean, I'm sorry, the stronger the gold gets, the weaker the dollar gets. The stronger the dollar gets, the weaker gold gets. So I feel like if tomorrow's number does come out really really good for the dollar, and I'm pretty sure that the rates that they're referring to is all about the U.S. dollar, and I feel like the more that non-farm payroll numbers are, as far as being good, could possibly cause gold to go down. So that's just my little analysis. Um, so pretty much we're still in this little red zone in which we were having trouble breaking for a long time. I felt ever since we came and formed this green wick right here, I feel like we've been just kind of just consolidating and not been kind of forming lower lows and lower highs. And I feel like this was another lower high. These are lower lows, a lower high, and I feel like now we could possibly be forming a lower low. Let me straighten this out. I feel like it could definitely respect this wedge. Um, I do ultimately want to see it continue to go up into this weekly zone, but I feel like it would need to pull back down into lower prices to get some running room to finally be able to break out of this red zone. But I feel like tomorrow could possibly be the news that's needed to either to break this zone up and out of it to the top, or to finally break out of this consolidation down below, because even when they try to come down below, it was struggling. It was having wick rejection. So it just really didn't know what it wanted to do. It was just really choppy. Just no clear cut direction. So the 7 is still below the 65 on this one. The 7 is above the 65 on this one. Um, and I feel like this could still be in a retracement phase, meaning that if we're going up or an up movement, if we're retracing, we're trying to come back into lower prices to where orders were placed in order to get enough momentum to finally break out up to the top. So I feel like we do have a double top, or even like a neck, or excuse me, not even a neck, a head and shoulders pattern. And I feel like this was the head and shoulders pattern I was trying to kind of talk about last time, but I feel like I was forcing it. And it was pretty much that these two, this was the left shoulder over here, and this was the right shoulder over here. Even though it looks like we kind of got like a little fake breakout, it still kind of respected the structure of the head and shoulders because it didn't come anywhere near the head. And I feel like if we can finally get a break of like this neckline, I think this would be enough momentum needed to come down to lower prices to finally bring prices up higher. So I feel like this head and shoulders pattern is still a little valid, even though there's things poking out of the top. I feel like it's like a was like a little false little breakout. I feel like this head and shoulders pattern played out, but maybe I think over here could be another set of head and shoulders where this could be the left shoulder over here, and this could be the left shoulder over here, and it's still respecting and it's going down. So if we can get a break, which we did, it looks like we did kind of get a break of this neck level right here. The market is probably trying to come back up to retest these neck level which it just broke, to finally come back down to touch the green line. So I feel like I would have to kind of follow suit and still follow the retracement, even though the overall trend is down. The retracement of a down move is up. But I feel like overall trend is down. But you know what also too, what kind of sways me with this pair is that, yeah, over here we've been making lower lows and lower highs. But in a way, ever since we kind of came down here, we've been making higher highs and higher lows. And this was current, and this was, in this year, after 2020. So we would have to kind of look on on the direction or the market that we're in. So if we came from here, we're making higher highs and higher lows. We finally got a break over the moving averages. I feel like the longer term would be buying. So for right now, I'm still only going to look for short moves because of these struggles with these wicks at the top, double tops and head and shoulders. And we finally got a break of its little neckline. I want to see prices come back up to retest these lower levels to possibly come back down. But what worries me about it is that if it does come back up, it might come up back up so strong and it might just break up out of it and just keep going to the top. So I think for me on this one, I think I might have to wait for a little bit more confirmation. I mean, I really do want to go long. I really do because it's of the higher highs and higher lows. The way structure has been forming. The 7 is above the 65 on the weekly and the daily, so that's 2 out of the 3. So like I said, man, I just feel like you can kind of argue both ways. If you still want to say we never broke these highs up here, we never really made higher highs and higher lows. We stayed below these highs up here. So are we following suit from these highs and not and noticing that ever since these highs happened, it never came back up to the high up here to retest it? So we would have to follow that this was a high, another lower high, another lower high. Or do we follow that, ever since we hit this lower area down here, we've been making higher highs and higher lows and even got the market to break over the moving averages, retest, touch them and retest them, respect it, and then can keep going back up again. So I think for me, I'm going to kind of stay to the side on this one. I really do want to go long because I want to follow the highest time frame, which is the daily. But it's just when the lower of the time frames I begin to get, it's starting to show me rejections and ceilings at the top, and no higher highs has been really formed because we never broken these highs over here at this green line up here. So Ty, tell me what you think. I know I said a lot of things though.
All right, now AU has got me excited once again because for the longest amount of time, we go back to the daily, for the longest amount of time, AU was stuck in a very tight consolidation range. Initially, it started off as a head and shoulders, which it still is. It just took so long to form that I just said, man, nothing is going to happen. But we be patient and long enough, you be patient long enough, the market will move. So let's hide all of our indicators and support and resistance levels. And let's zoom in just a little bit. So I like what I'm seeing because here's the two things that I see. I've been telling you guys for a long time that when it comes to AU, we're pretty much stuck in a range between 78 cents and 77 cents. So until it breaks above 78 or breaks below 77, it's nothing for me to talk about. So now let's look at where we are right now. We are at 76.50 something, which means we have not only broken through 77 cents, but we completely violated that support level and blew straight past it on the daily chart. So that's a good thing. That's what we like to see. We see that the trend has been, the consolidation zone has been broken to the downside, followed by a bearish candlestick pattern. So the things are lining up. Even though the longer term trend is up, we have short term bearish reversal patterns. We have follow through. We have breakthrough of our head and shoulders, neckline. Well, depending on how you draw your head and shoulders, everybody is different. But we have the break of a local neckline at 77 cents. So that's very exciting for me. Also, at the same token, we have a bearish engulfing that led to the break of that 77 cents level. So that really solidifies it even more for me and kind of helps put me in the direction of looking for the short trades. Now, one thing I know about impulsive moves to the downside is that you don't want to just get caught up trying to short it as soon as you see that bearish engulfing. Just like I was talking about for gold, where you have a pullback that comes back up to a level that used to be previous resistance, and then you see prices reject from those levels and then kind of start to fall off a little bit. That's the same move that I'm looking for when it comes to AU. If we know that 77 was the previous consolidation zone bottom, now that we've seen the breakout from that level, all we have to do is wait for prices to come back up, retest that level. Here's the thing though, I don't think it's going to be a perfect test. It might not come all the way back up to 77. It could catch the wicks down at 76, 76.80, 76.75 ish. So really just keep your eyes peeled when we get to that overall scenario and see if we get that rejection at those prices. If we do, I feel like the short trade is definitely back on and we might be able to take it back down to 76 cents. So we'll have to see how this plays out, especially with the non-farm payroll news coming out tomorrow. That should be a huge catalyst for this pair right here. It's already moving.
All right. So there you have it. We're pretty much just looking at and putting all the pieces together of what we've been looking at the entire week. We're looking at areas in previous consolidation areas where the market been sitting for a while. Like Tiberius said, that 77 cents, we've been stuck in it. And like he also said, it violated those lower lows. And he said, if we can get that retest, excuse me, I have bad burps. He said if we can get it to retest these lows, we can definitely see it come back down to the 76 area, but we're only going to area where we are familiar or the market has come to before. We're not going to uncharted territories. We're only following what the market has done before. Let's kind of look at what the last time it broke through it. It could probably do what it did over here, which was come back down all the way, touch the green line, consolidate, not even come back up to retest it. Just shoot to go all the way back up again. So mind you, it can do that as well. It might not even have enough momentum to retest these lows before it comes back down. It might just go all the way down with a vengeance. But if you ask me, I really feel like the way I have this uptrend line, I'm really not like showing the true picture. And I feel like we're possibly, yeah, I feel like, I don't know, because I feel like before all this kind of happened, this is how the line really should have been drawn. And if we got a break out of it and this was the retest of the line, I would have to agree that it's coming down. So let's just see what tomorrow brings and what non-farm payroll numbers gives us. So let's hop into our best section, which is our exploration section, which we've added to the show to kind of give you guys exposure of other things going on in the financial market. We've covered a lot of things, bonds, futures, NFTs, all those things. And I feel like the one thing that we definitely need to cover tonight was non-farm payroll. And I guess what you guys are saying, like, what is non-farm payroll? Non-farm payroll is pretty much statistics given by the Bureau of Statistics, I think labor statistics, and it pretty much gives numbers on how much jobs were added to the market. They count up how many employees have been like abled workers to add to the market. The only workers that they don't include in this particular group of workers are manufacturing jobs and actual farm workers. So they count everybody else in that employment number. And you're probably asking, how is that even important? This non-farm payroll number is pretty much gives us a number of how much new jobs were added to the market. That's very important because if there were jobs or extra jobs added to the market, that means that there's more dollar or more U.S. currency being circulated in the economy. The more money that's being made means the more money that's being spent, which means the more of these stores are, hiring people and creating jobs and pretty much keeping the economy moving the way it's supposed to. So the way us forex traders use this non-farm payroll is that we get these numbers, and it usually comes out the first Friday of every month, and we see how much jobs have been pretty much added to the market. If those numbers are good, we can expect good results or good effects coming out of the forex market. And you're probably saying, how can that even happen? So let's give possibly an example. Like, it's all about supply and demand zone. I'm gonna let Tiberius get into the technical. I'm only gonna get into the fundamentals, but it's all about supply and demand zones. Demand zones are usually, like we said, zones usually located at the bottom of areas, which are there for buyers to get into to try to bring prices up lower. Supply zones are pretty much zones are that are at the top of the so-called market or the financial market in which people want to sell. That's correlated because if the market, if these numbers come out positive and bring prices down into strong demand zones, that would mean that would give us the advantage to get in to get high probability trades to go long and to buy in the market. So I just feel like these things are good to know because when you know about these events, and also let me go over to Forex Factory. I know we've always used this. We probably haven't talked about it a lot. Forex Factory is pretty much the hub of Forex news for us Forex traders. Tomorrow is June 4th. So this tomorrow is going to be the news that we're expecting to come out with tomorrow. Notice that it's going to be affecting the US obviously because it's going to be the United States and the jobs and those type of things. But also look who else is being affected in this, not affected, but who else is coming out with very important news. Canadian. This information is important because you have to, as traders, you guys have to know how to not only plan for regular trades, you guys have to learn and prepare to set up plans for when the news come out. And I feel like, in my opinion, I feel like that was a good thing for us to talk about because those are actually two different plans. When you want to plan for an event like non-farm payroll, we can expect, and we is based on the numbers, usually has high volatility during that day, a lot of movement. So we need to prepare for what type of movements we could be expecting tomorrow. So for instance, if I'm looking at AU, which is, it has USD in it, which could probably be a factor in which when the news come out, if Tiberius, which he said is true, is to come back up and retest these lower areas, these are very, very, very strong resistance levels. And if it respects this, it's probably going to continue to go down. But does this mean if prices on AU goes down, so say if the price if the news is good for non-farm payroll and this goes down, or is that correlated? I'm not too sure. I just feel like when non-farm payroll comes out, you want to find prices in the market to hone in on one, but also wait for that news to come out before you begin to enter into trades. So let me see. And so those are two things I want you guys to kind of remember. And we pretty much kind of use them as indicators. If the news is good for the US dollar, we could be expecting any pairs that has the US dollar on it, it should be doing good. Look how we broke down gold. If tomorrow's news comes out tomorrow and everything is great with all the US dollars and jobs have been added. There's a lot of employees ready to work and the capital is moving and the dollar is circulating. That means if the stronger the dollar gets, we can use that as an indicator to trade gold. So that is how I can use that as a tool. Tomorrow, if the news for the dollar comes in and it's bad, meaning there's not enough money in the economy, it's not circulating, people are not spending and being consumers in the market, we should be expecting gold to go up because the US dollar is suffering from that bad news that came out and is, causing traders like us not to want to get into the market, so to say, or to put our money into the market, so to say. The less money we hold from out the market and not spend and circulate the money is bad for the economy. So that's why we need to pay attention when that news comes out tomorrow. We have to make sure, one, let the news fully come out. Two, don't have any active trades open while the news is going on. Just because you don't want to catch yourself in a situation where you're trying to fight back some pips that you lost or some percentage of your account that you lost. So now you're trying to gain back what you lost plus what you're trying to get. So it's just a lot. So tomorrow we're gonna we're gonna we're gonna briefly go over it, but tomorrow we're gonna definitely show you guys how to properly write out and plan for a non-farm payroll trade tomorrow. What else is a very good thing I think you guys should know? Um, I think I told you it's the first Friday of every month. We use it. We use these numbers to as indicators to figure out whoever is being impacted, whether it's U.S. USD or Canadian. We use those numbers and try to see where prices are going to head into the market, whether they come into strong supply or strong demand zones. So I'm gonna swing this over to Tiberius, let him get into the technical properties on which you need to know for tomorrow's non-farm payroll. So there you go, Ty.
All right. So when it comes down to non-farm payrolls, D mentioned a couple of things that was very spot on. He talked about how when you plan for non-farm payrolls, you have to plan in a way where you expect more than what you're used to. Like you said, it's increased volatility in the market during this time period because it's a major news event. So people are shaking and moving. You have everybody in the market pretty much they have to react because the bigger funds, they have to put money to work. The smaller traders, they might be taking money off the table, putting money into the market. It's a lot of transactions going on, so expect a different market environment. So I think that's really important as well. And then also, when it comes down to non-farm payrolls, you have to understand how it's going to affect the particular financial asset that you trade. So let's say, for instance, you trade stocks. Well, with stocks, the ripple effect is going to be more so after the news comes out because the U.S. stock market doesn't open until 9:30 a.m. The news comes out at 8:30. So if you're trading stocks, you might have to have a different type of strategy to use. You might have to prepare for the long-term effects of this number because when the number comes out, it has two parts: the right now and then the later on. Now, I've seen a lot of occasions where the right now, meaning on that day when the news comes out, you have a certain type of move that moves a certain way. Let's say it goes up in this particular scenario. Well, you might think that, oh, okay, it went up on Friday, so the market likes the news that came out. But then over the next couple of weeks, the market just gives back all of the gains that it made on that Friday and just continues to drop like a rock. Because people had that whole weekend to really sit back and analyze what that number meant. And they decided that they really didn't like it as much as they thought they originally did. So non-farm payrolls can lead to some big moves and it can swing one way or the other. So I would suggest that with stocks, you try and figure out which way the long term, which way that news announcement is going to affect prices in the long term. So that's where it really comes back to the section that D was talking about, fundamentals. You have to understand the job number and how it relates into the economy. meaning that you have to know the backstory because you can't just take one job number and say, okay, we're doing good. It has to be relative. You have to compare it to what's come before. So you have to know your information. You got to know your history to put the whole story together so you can make the right decision as to where you want to take your stocks. So with stocks, you can trade non-farm payroll, but it'll be a little bit different. You can still get some money off of it. Different strategy though. Now, when it comes to everything else that's open during that time period, so we have bonds, futures, forex, all of the things that we talked to you guys about before in our financial exploration section, all of those things will be open when the news comes out. So those are more so the things that you want to trade right then in the moment because when the news comes out, those things are going to be moving back and forth, up and down, especially all of the USD pairs. So everything that we talked about, AU, gold, US 30, and dollar Swiss, all of those pairs will be moving. So if you want some quick action when the news actually gets announced, look to trade on those pairs. And also, in terms of mentioning the long-term effects of non-farm payroll, the long-term effects, you can actually protect yourself if it's negative by using some of the things that we've been telling you about. So that's why we come and we've been giving you information on different asset classes, the correlations between each other and how they relate to one another. Because let's say tomorrow the job number was a lot less than expected and people were not happy with what came out. Let's say the market started to tank down a little bit. Now, if you didn't watch the show, you might start panicking and start saying, oh man, my stock portfolio is going down. What do I do? But if you paid attention in class, you know that you can use these different asset classes to help you mitigate your risk if bad news does come out tomorrow from the non-farm payrolls. So with your stocks, you guys remember, we talked about bonds not too long ago. So if the stock market is going down tomorrow, what should be going up? The bond market. You guys know that from the class that we discussed when we talked about bonds. Bonds have a opposite correlate, well, excuse me, not opposite, but a negative correlation with stocks. Stocks go down, bonds have a tendency to go up. And it's the same thing with not only futures, but options and forex as well. So whatever positions you decide to take tomorrow, I want you don't have to do it necessarily, but I want you guys to just remember and think about when you take a trade one way, just hypothetically think about if I was to hedge my risk on this position, what other asset class would I invest in? So tomorrow, if you guys want to buy stocks, I want you to just think in the back of your mind, I should buy bonds if this doesn't go right. That's my backup plan if S starts to hit the fan. So let's say you're trading Forex. One thing I didn't talk about was that we have Forex currency futures. So let's say you go and you trade AU tomorrow. You go long in the Forex market. The market goes down when the news comes out. You can actually short the futures contract for AU, make money on the downside until your long position in AU recovers. Then you get rid of your short position, you take the profit from that, and then you buy more AU at a lower price and you ride it back up. So that's just another one of the ways that you can use all of the information that we bring to you to kind of remix and navigate your way through the market. And here's the thing, I'm only giving you the basics and the general surface level info. You can take this information and remix it all types of different ways. Find your own correlations in the market amongst these asset classes. Then come back to the show and put us on game so we can all learn. So don't just think you have to do it in one specific way. This information is information that's meant for you to expand your mind, just to help you maybe get you some exposure to things that you might not know about. So then you start to do things in your mind that's very interesting. You start connecting the dots. You might have learned this about finance in the past. We teach you this other one thing. Then before you know it, you can kind of put those things together and say, hold on, I think I might have a trading system right here. So that's why we come here and we try and drop game and knowledge on you guys. And tomorrow we'll be creating trading systems right here on the stream live. And then we'll be taking those plans and actually executing them in the market in a live trading session. Non-farm payroll announcement, man. Tomorrow should be good. It's going down. So, D, I know you have some things you want to talk to the people about. Go ahead and drop that game for them, man, please.
So we're wrapped up with that good old exploration. So let's move right on into our traders talk. So I think the knowledge I want to drop on you guys for tonight is I hope you guys wrote down your levels because those levels are going to be very, very, very important tomorrow. Understand the levels that we spoke out tonight are either going to be hit, respected, or blown through. But understand either way it goes, we're going to be prepared all around the table. We're going to use correlations to try to really execute our trades tomorrow. So if our news comes out strongly tomorrow and the great jobs have been added to the market, we probably could be looking to expect to short gold tomorrow. So I feel like we can use these things to try to find out what pairs we want to put into play as far as buying and selling. So I think for me tomorrow, I'm going to focus more on AU and I'm going to focus on being that CAD has some news coming out. I want to focus on CAD JPY. That's another pair that is actually a little wacky. Let's actually bring it up really quick. Am I saying it right? I think I have what is that CAD pair? It was like it was like CJ, but that was one of those weird. It's like Canadian yen. But if that one doesn't go, I'll focus on UJ because UJ actually used to be a really good pair of mine that I used to trade, but I just kind of fell in love with other things. So I want to focus on a CAD. Oh, this is yen. I'm a CAD, not yen. I thought there was definitely a CAD J. I seen one of my friends trade it. I don't know. I just want to definitely find a good Canadian pair to trade tomorrow just to see what kind of effects that's going to have on it, whether it's good or bad. Um, so I'm going to just pretty much stay on the side of that. But tomorrow, I really want to write down out with you guys what we could be expecting to get. Um, because non-farm payroll is very, very volatile, and we want to try to not leave quote unquote anything on the table tomorrow. So let's definitely make sure we focus on our levels and pretty much just execute, man. Let me see if there's anything else I want to kind of say before I pass it back over to Ty. Nah, man, I think tomorrow what we really, really want to focus on tomorrow is being patient. Number one, really following the things that we said tonight and pretty much focus on what we see when the market opens, because I know a lot of the times at least me as a trader, I get so caught up in the projection or the prediction that I wanted to happen, and it almost pretty much like blocked out my vision on what was currently going on. So it was like I was trading in this like biased attitude just because I so calledly, figuratively said, the market was going down. I just completely ignored all signs because I felt like my prediction was so on that I ignored flags that was in my face, like lower lows and lower highs. The moving averages crossed over, like simple things like that, just because I was so set in my plan. You have to understand too, though, with the market, plans do change. I'm going to say that again. Plans do change. A lot of the times when you make plans in this market, man, it never goes the way you plan it to go. That's why it's called predictions. We only try to just really figure out what the market is going to do based on what it's done before. That's the best we can do. We can't predict the market any other way. We would only have to go off what it has done before. So I feel like we have to stick to the plan, like, and understand that maybe the plan that we wrote out is going to change in the next 5 minutes, just because news like non-farm payroll comes out can definitely just erase everything we just talked about tonight. So what we did tonight, we just wanted to cover all bases, whether it was going to be good or going to be bad. We want to make sure we put a whole plan from A to Z out. So if it did go against us or go with us, we're prepared either way. So those are just the three things I wanted to go over. Understanding that, plans change. One, two, let when the market opens, we want to be patient and not ignore the signs that happen. And two, man, just follow out the plan that you originally write. So Ty, man, go ahead and tell me some things you want to drop to the people tonight before we get ready for tomorrow.
All right, so I want to piggyback off of what you said, D, and I want to tell the people why having a strategy and having a dynamic strategy, a strategy that can change, is so important. Because one thing we know, as you guys probably know also, if you've been trading any type of financial market, you know that things don't stay the same for too long. One thing that's constant about the market is change. The market is consistently changing, consistently moving. So it doesn't make sense to just have one static plan where you say, this is how it'll be done. No matter what happens, I'll continue doing it this way because I know that this works. You always have to have a mulligan, meaning that if things change, you got to be able to think quickly on your feet and say, okay, what's the situation now? Based on what I'm seeing, what changes can I make to my plan to make sure that my plan is still the most effective way to tackle this market and get profits out of it? Because that's the goal at the end of the day. So we always have to think and be conscious about not only what the market is doing, but what our own minds are doing. Are we in a mental mind frame where we can actually be open enough to say, what I'm doing isn't working? Let me switch it up before I take too many losses. Because the market is going to tell you whether it's working or not. It's up to us as traders to decide whether or not we want to listen to the market. So that's the important part. First of all, having an open mind to be able to accept the information the market is giving you. Next, you need to be quick with your execution. Once you figure out that your plan is not lining up with the market, look, man, these markets are open and then they're closed, and they're open for a long time, but the bulk of action usually comes within a condensed time period. So when the market is moving, we don't really have time to say, what should my next move be? You got to think quickly on your feet. So as soon as the market tells you what you're doing is wrong, you have to say, okay, what's the right move? How can I change what I'm doing to be more in line with what's really going on? So that way I can get the most profit from this potential move. So that's why you always need to have dynamic trading plans. You don't want to stay stagnant. If the market changes, you want to be able to change with it. So with that being said, that's what I wanted to leave with you guys tonight. I hope you learned something very effective, and make sure you tap in tomorrow, 8:10 a.m. Eastern Standard Time. We will be up a little bit early, non-farm payrolls. So without further ado, man, let me pass it over to D, and let's get our closing remarks before we get up out of here.
All right, guys, you heard it here first, man. Tomorrow is non-farm payroll. We're gonna be up and at it first thing in the morning, 8:10 a.m. Eastern Standard Time. I don't know where that is. In the Midwest, is 2 hours or 3 hours, and it's 3 hours. I don't know in California, but Eastern Standard Time, man. Tell a friend to tell another friend to tell another friend to hit that follow button, man. We enjoy every one of you guys who pull up Tuesday and Thursday and rock out with us, man. We love it and we enjoy y'all, man. We're definitely gonna do something for all our close viewers, man. We got something in store for you guys, but let's just get those levels, man. Let's study our levels and let's definitely prepare for tomorrow. You already know you can hit me on my personal IG at I'm the D Guy, at INDGUY, or you can hit us on our IG business page, which is Bison Trading Show on IG. You can definitely drop a comment, drop a question, or just even want to talk to us, man. We want to hear from our viewers hear what you got to say, what type of trades you've taken for this week. Man, we just want to hear all about it. You can definitely hit my boy Tiberius on his links at.
You guys can make sure you follow me on both Instagram and on YouTube under the name Ty Trades Futures. On YouTube, I stream almost every morning and show you how I'm working through my Dow Jones strategies and working through my S&P 500 futures trading strategies. So if you're interested in that, make sure you check that out. On IG, I do a series called Trade of the Day where I walk you through one of the best trades or worst trades I made during that specific day and tell you what I saw in the market that helped lead me to that trade, what I learned, and what hopefully you can learn from that lesson as well. And of course, make sure you follow the Bison Trading Show on both YouTube and on Instagram. As D just mentioned, our page is newly up and running. All the updates for the show will be broadcast over there, so make sure you tune in. And with that being said, man, I think that pretty much wraps it up. You guys know what time it is. It's the first week of the month. Tomorrow is going down. Non-farm payrolls, man. What more can I say?
All right, for you guys who've been with the show with us for a long time, man, man, Tiberius, take us out of here respectfully.